We're looking at standards today, and in particular, standards that cover things like leasing, long-term contracts, a little bit of tax, and if I have time, I'm going to make a start on, or help you through the homework by looking at a chapter called Reporting Financial Performance. Now, what I'm hoping is that you will be reading the basic material in the various chapters in the class notes, and what I'm going to do in class is pick out past exam questions, extracts, that are in the class notes, and I'll show you how to do that. And by demonstrating those questions, and thereby scoring a few marks in the exam, you will have developed some skills to use for question 2, published accounts, and questions 4 and 5, which is obviously on standards. So this is my hope. I don't know whether by doing the course, the program there, in arrears and advance, Orchid, Madrid, Chamber, Mallet, that's something like 3, 4, 5, 6 questions in one session, whether that's too much, but I think it's better for us to push ourselves a little bit and get some ideas. At least you can see me explaining these various things. Clearly on the main interactive recordings, 51 whatever hours it is, you'll see me doing much more than this, but let me pull out the most essential bits and pieces. So what is leasing all about? Quite straightforward. If I can turn, therefore, to our class notes. Impairment, by the way, was set for homework reading, so I hope you will pick that up. I won't say too much about impairment. That's something that you must study yourself. But beyond that, there is this chapter on leasing. So as you can see from the study planner, impairment is something that you must do yourself, and if you need a hand, have a look at my recordings on the question called Steam Days. A very nice question on impairment. Anyway, let's concentrate on leasing. This is your IAS 17, and so what is leasing? A student who passed bought me this, or gave me this little present, which is actually a mouse, a computer mouse. It's a fancy motor car. Now what I want you to imagine is you are the person who is you need to use this car. You can't afford to buy it outright. So what you do is you come along to me, the bank, and I write out a check for the cash price of this car. And because I've given you the cash price of the car, what you have to return to me, the liability that you have to me, is obviously the cash price itself. And if you pay me slowly over many years, then you've got to pay me interest as well. So I'll run through that again. You need a vehicle, an asset like this for your business, one of your directors or for your business, whatever it might be. And because you can't afford to buy it outright, you are, by the way, what's known as a lessee, the user of the asset. I'm the lessor, the bank. So I write out this check, I give it to you, you hand it over to the supplier of the motor vehicle. That supplier gets the check, which I wrote, you get the car, and you drive off with it. Now, the big question that arises in the exam is the payment that you're going to make to me, is it to be made at the start of the year or the end of the year? Let me start with one which has your payments to me at the end of every year. And so how would the interest work? Once I've cracked that, I'll turn it round and look at a situation where you pay me the installments at the start of the year. So in quick succession, I'm going to do 2 questions whereby you bring this asset onto your books, and then you have to record the depreciation, all that kind of thing. So that's what you're visualizing, some kind of an asset. All right, so I'll put that aside, make sure I don't drop it. It's a useful thing for me to be able to hold up and show you what we're talking about. So we turn to page 152. I'll show you how this kind of thing might work. So where are we? Let's move on a few pages. You can read all those notes yourself. This is page 152. This is the question I wanted to do. So if you haven't had a chance to read the class notes before the session, please do so after, but make sure you do it quite soon, around the time of this session. So that when I pick these things up, so why am I doing these questions? The answer is quite simple. We're doing standards. Remember the other day we did a question called Interceptor, which was basically a trial balance from which we produced the P&L and the SFP. Though in that question there were little tricks like the CUD mnemonic for tax, depreciation, that kind of thing. But it lacked as much or enough detail to become a full-blown exam question. So what I'm attempting to do today is to put into place little things like leasing, contracts, etc. And then we'll revisit published accounts when I see you next time, where we can do a question which has things like leasing, etc. in it. But certainly very soon we'll be doing that. So this kind of exercise can come up in question 2, published accounts, or questions 4 and 5, which is obviously the pure standards questions. Could be anywhere really. So your aim is to cover a typical exam scenario. So example 1 is on your page 152. And this one is leasing in arrears. In arrears. And this is in the books of the lessee, the person who's using the asset, okay? The books of the lessee, as they say. So, I'm going to say in lessee's books, the user of the asset, lessee's books. So how should we do this? Let's have a little read of the question. A company has the option of buying a machine outright for cash, so the cash price obviously is there, 14,275, or leasing it on a financial lease paying 5,000 at the end of every year for 4 years. So you can see there, if you multiply 5 by 4, that's 20,000. That becomes what's known as the lease price. And so what we're trying to establish is, if you compare the cash price to the lease price, the cash price to the lease price, the difference between the two, 5,000 and odd, 5,725, that's basically your finance cost or interest. And then you spread that in your P&L account, profit and loss account, as your charge, whereas I spread that in my profit and loss, if I'm a bank, as my income. So this is the idea behind it. And the 5,725, whatever it is, equates to 15% per annum. So the examiner will never expect you to work out that percentage. It'll always be given to you, 10%, 15%, whatever it might be. Just use it. It's not a maths exam, so don't even attempt to prove that it's right. Just use it. Required to show how the company should account for this lease in a statement of profit and loss, and obviously a statement of financial position for the first year, might underline the first year. So I'm just reading up to the broken line. Let me throw that question aside and show you how you might solve something like this. This is my concern. So let's do it in 3 easy steps.